Tackle today, the Justice Brothers from Tackle Trading bring you all the charts, news, and analysis so you can be informed in just a few minutes in your trading decisions. This market is a technical market right now. There is going to be separation. Everything's been parting. Certain things will separate. Charts are going to tell. And if you want to read charts like my brother does, if you want to be a master technician, that is what we do at Tackle Trading. We put the education in application. Teaching technicals, Matt. You'll be teaching this class coming up. It's a great class to learn technical analysis, isn't it?
Yeah, Master Traders, of course, we teach every single month at Tackle Trading for our pro members. So all you need to do is hit the link in the description below, register for a free trial membership of the pro membership of Tackle Trading, and then you can come hang out with me and Gino next week in the latest edition of Master Trader, which is the best class you will ever take as a trader or investor, hands down, period, end of sentence. Come join us at Tackle Trading, have a lot of fun, and put the education in application, no doubt about that.
Yeah, Matt, we're having a classic hesitation day in the market, right? This has been a very strong rally. You need to digest, right? That digestion can come in consolidation, can come in orderly pullbacks. Appears like that's what we're having today.
Yeah, I see this technically, and honestly, everybody in the market right now is having different conversations, some fundamentally, some technically, some behaviorally, and obviously some hangover from the election last week as well. But you're really starting to see this behave from a technical perspective, and that's not abnormal when you get a catalyst event, you get the immediacy of momentum, you allow that momentum to play out, and then what you're seeing from a candlestick perspective is what we call a little bit of slowing momentum, slower candlesticks than the preceding candlesticks as you're coming up into an all-time high level of resistance, a significant whole number right around 600 in the newsletter. We talked about secondary patterns getting developed, and that is exactly what we're seeing play out here in the first 2 days of the week. Not unexpected if you listen to the Tackle Trading newsletter. This was to be expected. Secondary patterns was the word phrase of the week for Tackle Trading, and that's what we're seeing play out here. I like it. I think it's going to be important to see these secondary patterns play out, and quite frankly, are we going to be looking at a high base, very clean high base, or are we going to be looking at some degree of pullback, navigating a bullish retracement scenario? Those are different beasts to navigate from a clean high base to a retracement, but that's what it's setting up right now, and it looks good.
Yeah, I know. And let's go to small caps real quick, because what's going to be interesting, we'll talk about the CPI report here in 1 second, it'll be tomorrow, is what do patterns in interest rate sensitive areas of the market look like after the CPI? Biotech, small caps, ARK, just on a absolute, like, oh my gosh, let's go to the moon. What is pattern development, if yields in the dollar continue to go? Now, if the yields in dollar get crushed, I have a feeling we're going to get really great.
If yields in dollar gets crushed, I kind of have a feeling it doesnesn't matter what area of the market you're going to look at.
Yeah, it's all going to be good, right? Commodities will get reprieve, everything, right? But that's tomorrow. But assuming, that part of it is easy, man. If yields in dollar get crushed, then everything's just going to have a good time, but if they don't, right, what does pattern development, right? And I think that's going to be really, really interesting in the coming days.
Well, doesn't it at this phase after a catalyst last week, as you start getting into the next stage of economic reports, start to see separation? And isn't that a tale as old as time?
It always happens. Yeah,
it's not
on the catalyst. It always feels like everything's going to the moon, and then you start seeing separation. And it doesn't mean areas
because different policies, different economic analysis impacts things differently, right? And so, for example, if you have a really good inflationary print tomorrow, meaning a miss, right? Really good for the market. I could see those areas of the market that are sensitive to the yield conversation doing really, really, really well. Whereas if you get a little bit of a hot print and the Fed is already tapping on the brakes of expectations for interest rate cuts next year, you're going to have a little bit of a different impact.
It's hard not to see blue chips lead, right? It's hard not to see blue chips lead.
Well, if the interest rate sensitive conversations we've had over the last 2 years, plays out in the current market, yes, hot inflation would be negative. Hot inflation against the expectation. We're not talking hot inflation historically anymore. But if inflation comes in hot tomorrow, Yeah, you could certainly see, a conversation on the concern on the small cap, on ARC, anything that is really needing uh financing and debt to kind of finance their operations. That's going to be a little bit more tricky versus, say, S&P 500, which is, large big tech cap type areas of the market. So to answer the question without going into too much detailed conversation here, I certainly would expect a little bit of separation from the indexes, which have not really separated yet. We've seen separation in the sectors. Obviously, we saw that throughout the last week. We haven't really saw it from an index perspective yet. I do expect that to start occurring tomorrow and the next day as we get the PPI report and the CPI report.
Yeah, and that CPI report will be released tomorrow morning. The most important economic report of the month. Not as important as I would argue others, but it has had heightened importance. After a couple of hot prints, we'll see those numbers, break down all the price action tomorrow. But while that macro is going on, Matt, we have individual stocks. Earnings season. It doesn't feel like it feels like earnings season was a month ago in this climate, but
it's weird. It's so weird. The last 2 weeks of earnings season was hot and heavy. Over 50% of the entire market, like 60% of the entire market. And it didn't feel like it because It feels like there were other more important conversations, and rightly so, obviously. But we're still in earnings season at the tail end. At the tail end, we only have 9 S&P 500 companies reporting earnings this week. A few others outside the S&P that are important as well. But it's a limited deck here this week, no doubt about that. But what we do have today is we have Home Depot's earnings. We have some news coming out on Honeywell, as well as some released information on Netflix as well. Home Depot was the only earnings I felt that we were going to talk about in stocks in the news here today that came out with a beat against expectation, just a small beat, 2% beat against expectation. Revenue was up 6% year over year, and they officially did raise guidance by about 3 to 4% as well. And so you're looking at a pretty decent report out of Home Depot. Not the best EPS beat, but if you read the newsletter over the weekend, you would know EPS beat percentage has been a concern in this earnings season specifically, and Home Depot certainly follows suit with that. Honeywell's in the news because activist investor Elliott Management is taken a $5 billion plus stake in Honeywell, and they're pushing for Honeywell to split its automation business and its aerospace business, something similar that other companies in the aerospace area of the market have done recently and have done very, very well with it. For example, GE split off their healthcare business, their traditional business. They split off their aerospace business. All three have done good since they split. All three were terrible together. And so maybe Elliott's on something here with old Honeywell. Honeywell gapped up on the news as Elliott Management sees an estimation of 75% upside for Honeywell shareholders if they do in fact go through that. I called it a split, call it a breakup, but basically they're splitting their segments of their business into individual companies. And Netflix announced that its ad-supported tier, that tier they launched just a couple years ago, has over 70 million monthly users now globally. They also announced that their ads were sold out for the 2 live NFL games on Christmas Day. Netflix is on a little bit of a run here, no doubt about that. Let's take a quick peek at these companies from a technical perspective. Home Depot kind of stuck in a range at this point. The previous trend is obviously over as you clipped way too many support levels on the short term. Now you're looking at that as an overall neutral type situation with a very clean resistance level at that 420 mark. When you're looking at Netflix and Honeywell here, Honeywell gapped up. This feels like a little bit of an overextended gap up. You see it from an exhaustion perspective. Obviously positive news, but a hypothetical scenario with Elliott Management and the breakup and, obviously just rumor here. But from a technical perspective, little bit of an overextended gap up. You were overextended going into the gap. The price action following the gap does lead to a conclusion of a gap fill to a certain extent. That looks like a little bit of an exhaustion gap type situation. Once again, if you struggle with technical analysis to a certain extent, come hang out with us in Master Trader. next week. And then on the last stock in the news here today, Netflix just has some positive news. They were on a report over the
Yeah,
weekend.
could we get a reverse split?
They definitely need.
I mean, a split, just as a regular split. Excuse me, but
we don't want an $8,000.
Yeah, but can we get a split? Come on,
we want a 10-to-1 split. Bring it down to $80.
Come on,
Let's
everyone's
do this
doing
the right
it.
way.
Everyone's
Netflix
doing it. Yeah.
It's so obvious. Netflix, it's so obvious. They would be supported. It would be good for the investors, no doubt about that. Anytime a company gets up to this high level, you got to start thinking split, especially if you're such a popular company like Netflix, no doubt about that. That's all we got for stocks in the news here today.
Yeah, give me that dollar chart. I mean, commodities have had a rough time since the election. The correlation, and we talked about this over the weekend in the podcast, the correlation between the dollar. The commodities ignored the dollar during that initial run up. In the last 5 trading sessions, they have not. The correlation between commodities and the dollar has almost been 1-to-1. And so when you see a move, when the algos are selling commodities, when the dollar's up, not surprised the commodities having a rough go of it. It's going to be really interesting tomorrow. This is the chart I care about most because I have some commodity plays, right? I have some interest rate sensitive plays. I have some blue chip plays. I got a lot of stuff that could be impacted by this chart. This is the chart I'm looking at. I'm going to get up, right? And then I'm going to wait in anticipation for the CPI. And then I'm going to watch this chart's reaction. Right?
It's the most important chart going into tomorrow, and it's honestly at one of those positions on the chart that's equally important as well. You're staring down the barrel at a very, very important resistance zone between 106 and 107 here. Obviously, that's top shelf type pricing, even on parabolic type moves in the market. We've had 3 of them going into 106. 106 is held. You had a very extremely similar type price movement to about a year ago now, year and a half ago or so, very similar coming up to that 106, got blasted right back down on the downside here. And so 106 is the top shelf of this V-shaped recovery on the dollar. And you're absolutely right, Mark. Ever since the election, we have seen the dollar be 100% correlated or in a divergent way against the commodity space. And so obviously the dollar is going to be sensitive tomorrow. Commodities are going to be sensitive tomorrow. And we're certainly looking for some degree of slowing momentum first in the commodity side of the equation, and then possibly a support build secondarily, because whenever you see a deeper pullback against longer term uptrends like gold has had, you're going to be looking at a support build. You're not just looking for a pivot formation. You're looking for a short-term consolidation reversal type situation. You like the position on the weekly chart on gold. You like it from a multiple different perspectives because of the strength of that 20-period moving average on the weekly chart. But you got some concern on the daily chart where you just got sell, 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 sell. And a lot of this is algorithm based so far, and you know it's algorithm based because of what's going on specifically against the dollar here. And so gold's given up too much short-term support. You're going to need to see a reversal here against that short-term. On the silver side of the equation, just really kind of in the middle of a range here, $30 is certainly going to play a little bit of a role. Very similar price action as you're seeing in the gold area of the market. You're going to need to see a short-term reversal here on silver as well if you're thinking about the bull side of the equation. Copper has been extremely sensitive ever since the election, and it had one day where there was hypothetical Chinese stimulus being talked about coming from China, but outside of that one day, it has been a bloodbath in the copper side of the equation. And so obviously you're looking for reversal formations there. Whenever you're looking for reversal formations, you're not looking at it in the immediate short term. You need to see support build, slowing momentum, reversal. And when you're looking at reversal type analysis, I haven't done an art of the reversal webinar at Tackle Trading in a while. I need to do one on our YouTube channel, no doubt about that, Mark, because reversal analysis is as much as art as it is science. You certainly want to see slowing momentum. You certainly want to see double bottoms, double tops. You certainly want to see a breakout. These patterns that you track as you're going through reversal analysis is extremely important. And just one quick thought of Master Trader. In the actual live class next week, we don't really go on detail in reversal analysis. But in the on-demand, which has 5.5 hours of education from a technical perspective, we certainly do go through reversal analysis. And so when you sign up for Master Trader, remember, you don't just get access to the live class, which is 2 days, right about 5 hours of total education. You also get access to that on demand, which goes through things in a little bit different type of detail as well. And I certainly do touch on reversals in that class.
Yeah, listen, and give me Bitcoin to close up shop here this morning. All eyes in the, investing world are on Bitcoin right now, getting a lot of press, getting a lot of speculation. The crypto world is debating, like, all right, do we get a bull? I mean, right? Pattern development here is going to be key, isn't it?
Well, if you want to touch Bitcoin right now, it's from a momentum perspective, and what we're seeing is big, large candles, which are very, very tough to trade from a bar by bar momentum perspective. And so it's difficult to catch this outside of day trading right now. It's difficult to catch it from a short term perspective in terms of a swing trade. Outside of that, I think you are waiting on secondary patterns when you're looking at IBIT, for example. IBIT is one of those ETFs that we track from a crypto perspective. You see that $50 mark up there. You see it the last 2 trading sessions starting to consolidate right at $50. That is a very early sign of slowing momentum. Inside candle following a big momentum candle yesterday. And you could certainly just see this as taking a day off, catching its break after a massive move in the crypto space over the course of the last week. Obviously, just think about it like this. On IBIT here, if this was a stock, you went from $40 to $50, you're up 20% in just the last week, you would be asking for this to slow down a little bit to give you a secondary pattern. And over the last 2 trading sessions, we're starting to see that early sign. You can see it on the intraday side of the equation as you're seeing that consolidation over the last 24 hours or so. And so you're certainly loving what this is doing in the immediacy if you're if you're part of this movement. If you're not, I wouldn't chase here. I would wait on that secondary pattern, whether it's a high base, very clean, or whether it's a pullback. We don't know. We just see a little bit of slowing momentum just on this one candle at the top of the chart.
Yeah, listen, we're going to continue these conversations, go analyze some trades, go break it all down in further detail in our Traders Lounge. You can be a part of that fantastic hour and a half. TackleTrading.com. Sign up for that 15-day free trial.